Ashoka Buildcon's recent earnings are not looking good, but a turnaround is expected. First, we will cover the recent struggles of Ashoka Buildcon in terms of its financial growth. Then we will discuss the turnaround expected. So, if we go and look at the quarterly results of Ashoka Buildcon, these are the quarterly revenues. You can see below the sales in crores, we have the year-on-year sales growth. So the sales growth, you can see 42% for September 2022 quarter, June 2023 quarter, 3% sales growth, the 19%, 22% sales growth, 35% sales growth. You can see double-digit strong sales growth, 27% for June 2024 quarter. But then comes December 2024, and you see minus 10%. Stark contrast from the 15.5% only September 2024 quarter. Okay, one quarter, bad result, minus 11.7%. After that, minus 23.46%. After that, minus 25.62% revenue growth. Revenue declined by 25.6% for the latest quarter two fiscal year 2026 quarter. So last 4 quarters, the company has seen a big decline in the revenue. Okay. However, profit margins, these are the profit margins, they have remained pretty same actually. 32%, 32%, 29%, 27%, actually a bit on the higher side compared to the previous quarters. However, how is the turnaround? What is this turnaround I'm talking about? So here is Ashoka Buildcon's con call. What is a con call? Basically, the shareholders of a company and the management of a company, they have a meeting, a public meeting, and shareholders can ask management questions and management will answer. So a question was asked regarding this revenue degrowth. The question is, yes, sir, we have seen a sharp decline in terms of revenue in the first half. What is first half? First half means quarter one plus quarter two combined. Okay. So, how do you see the growth in the second half and the guidance for the entire year, both for revenue and margins? So, he's asking what are their targets for the entire year in terms of revenue and margins. So, answer by management. So, largely, the revenue for the first half has seen a decline. A couple of major reasons. One is of elongated monsoons for the 6 months continuing in October also may have a small impact on quarter three also. So, first reason was monsoon, and elongated monsoons can also have a small impact on quarter three also. Remember that. Second reason, and in certain projects, there is some delay in land acquisition for projects largely in the Maharashtra area. Delay in land acquisition. Second reason, okay? So, looking forward, we believe that based on these constraints, as well as new projects being bid out slightly on a slower mode, do we expect in the second half? So, new projects are being bid out slightly slowly. There's expectation that in the second half, there could be good bidding and winning of orders. Orders meaning projects. We expect to close this year with the same turnover as last year on the EPC. All right, very important statement. Same turnover as the last year. This brings us to this. All right, this is an Excel sheet. So, in fiscal year 2025, the revenue was 10,037 crores. Okay. Now, in the first half of fiscal year 2026, quarter one plus quarter two combined, the revenue was around 3,738 crores. Meaning, in order to almost match the fiscal year 2025's revenue, they will need to produce around 6,299 crores worth of revenue in the second half of fiscal year 2026. That is quarter three plus quarter four combined. When comparing this 6,299 crores, they need to produce. Okay, you compare this to the revenue of the company in the second half of fiscal year 2025. So the previous fiscal year second half, that is quarter three and quarter four of fiscal year 2025, that had revenue of 5,082 crores combined. So H2, this is the projected H2 that the company has to achieve or close to achieving this much amount. Okay. H2 divided by H1 is 1.239%. So the growth, if this is actually achieved, flat revenues are achieved, will be 23.9%. So quarter three and quarter four, they're coming quarter three and quarter four combined should be 23.9% higher. Should show 23.9% growth over quarter three and quarter four of fiscal year 2025. So that is some good growth. Yeah. And after that, in fiscal year 2027, so meaning fiscal year 2026, we're right now in fiscal year 2027, the company is expecting that 10 to 11% growth. So quarter three, quarter four could be growth, then fiscal year 2027 could be growth. So now this could be big, right? This could be a turnaround for the company from this era of 4 quarters of consecutive revenue decline to back to like high digit growth. Okay, this was it. That was the entire thing. Now, some further clarification and some further questions of the growth. So the analyst asks once again, but even for that, the required rate in the second half is around 18 to 19% odd revenue. At least 18 to 19% growth is needed in the second half, quarter three, quarter four. Management answers, so that will be achieved because generally second half is a high turnover and the projects which have taken off will give a lot of turnover in second half. So he's saying that will be achieved. His words, sorry, the management words, that they will be achieved. So that's a good thing. Then one more thing said. So Ashoka Buildcon, right? One of the things they did recently was that they literally sold some of their infrastructure projects. So that there were some infrastructure projects they were working on, and they sold them to some other company. So they're going to receive money for that. So this is related to that. The management has said this. Management is saying definitely there's a substantial deleveraging happening in the H2 after realization of the monetization proceeds of the BOT projects. Build, operate, transfer. BOT projects are a type of infrastructure projects, basically the infrastructure projects, and interest costs will be reduced. So they're selling off some of their projects, they're literally infrastructure projects, and they're getting money from that. They will use this to pay down debt in the second half, and interest costs will be reduced. This will really boost, or not really boost, but will be an addition to the profit margins, the net profit margins of the company, because the interest costs will be reduced because lower debt is expected because they will use the proceeds from the monetization proceeds from these BOT projects, selling off from these BOT projects to pay down some of the debt. So deleveraging is happening, which is also that's a good thing. And finally, realizing of orders. Okay, the company is expecting that by the year end they should add another 6,000 to 7,000 crores to the current order book. So by year end, they're expecting another 6,000 to 7,000 crores of projects to be won. Like the tenders, the bids, they should win around 6,000 to 7,000 crore more projects. And above line, you can read the company is bidding in roads, railways, power, solar projects, and buildings. So you can see 6 to 7,000 crores of more orders they're expecting, and they're bidding in multiple segments: roads, railways, power, solar projects, buildings, etc. So monsoons were there in the first half, and monsoons they're saying can have a bit of an impact on quarter three. There were some delays in some projects, especially land acquisition in Maharashtra. So a bunch of these factors led to a lot of delay in the project completion. And if projects are not completed, they cannot recognize the revenue. They cannot have the revenue as per accounting standards. So that led to revenue delay. Also, they're selling off some of their BOT projects. So the money that was supposed to come from the completion of these BOT projects or these infrastructure projects, that will also not come. So H1 was lower than that because of bit from that also. But H2, monsoons are not there. The projects which were delayed in the first half, they will be expected to be completed in the second half. And of course, regular projects will be completed in the second half. That will be expected to boost this revenue growth. Let us see if Ashoka Buildcon can achieve 18 to 19%, at least 18 to 19%, to maybe even 22%, 23% revenue growth, 23.9% overall revenue growth, double digits, high teens, reaching almost 20% revenue growth in the next 2 quarters. That is it. Bye.